So it's pretty clear from this chart that owing to optimism around interest rate cuts and the potential for tax cuts, the markets believe that demand for consumer discretionary products is going to be quite robust. Our current thoughts are more mixed. While unemployment is low, the consumer is relatively healthy, and GDP growth is solid, we're seeing signs of a consumer that is somewhat stretched. You may ask, why are they stretched? Well, let's go through a few of the details. First, you have the cumulative impact of several years of inflation across various categories, along with recent increases in interest rates that have disproportionately impacted some income cohorts. On top of that, you have consumer debt as a percentage of income that has increased dramatically, as have delinquencies on credit cards. And you can see this across the consumer complex. Mainly, most restaurants are currently experiencing negative traffic and trade down to lower priced items, along with increased promotional activity. Private label market share has also increased across many categories. Companies are clearly leading into discounts and promotions and highlighting value in order to win back consumers. For staple stocks, this means that top-line growth should continue to be pressured as consumers are more judicious with their spending. With weak volumes, there is also likely to be increased pressure on pricing, which likely will lead to lower margins. All this is coming at a time where staple stocks are trading at near peak valuations. Consumer discretionary is a little bit different, just owing to the fact that it is a very broad category. It includes restaurants, hotels, apparel, e-commerce, autos, and home building products. The categories where we spend most of our time are restaurants and travel-oriented companies. It's our belief that providing everyday value and not relying on promotions will enable the best-run companies to continue to flourish. Many of our long holdings continue to trade at reasonable valuations relative to their history and the market. Our shorts in discretionary are more focused on the low-end consumer I described earlier, and we believe they will continue to struggle.